There is something happening in the stock market right now that hasn't happened in over 346 days. And the last time that this happened, guys, things went absolutely insane for stock investors. And so in today's video, I'm going to break down exactly what it is that's happening, why it's so important, what happened the last couple times that we saw this, and what this can mean for our portfolios going forward. So we have a good bit to get into today. So let's not waste any more time at all, and let's jump straight on in. Now, today we're going to be focusing in on the S&P 500's chart specifically. Now, before I get into that, I will say, you guys know that when it comes to the stock market, I've made it quite clear that I do believe that technical analysis is a good thing, but there are more important things that you can look at. I think company earnings, I think, capital liquidity, I think economic conditions, I think geopolitical events. I think all of these things can be a bit more important and impactful for the stock market than charts. But I've told you, there are instances where using charting the right way in the stock market can be extremely beneficial and give you a huge edge over everybody else, especially again in specific instances. And I believe we are in one of those specific instances because, again, what we're seeing right now doesn't happen very often. Now, if you don't know what the daily RSI is, okay, I'm not going to get super technical into it because it's not extremely necessary, but I will give you just a general premise of what the RSI is, okay? So the RSI is a tool that we can use to just get a general understanding of the strength of a certain asset. So, for example, when I'm looking at VOO, I can get a good idea of if the price is strengthening up, if it's weakening, if it's too high, if it's too low. It gives you a little bit of general information like that. And the reason why I find it to be so important is because if you go look at history, when the daily RSI says something's too high, it's getting too high. It's going to likely pull back or fall soon. And when the daily RSI says something's getting too low, it's very likely going to see at some point relatively soon some sort of reversal back upwards. Its history speaks for itself, and I'll show you how you can use it very simply. Now, trust me, the RSI can be a very complicated tool. I do use it in a very complicated way in general, but this is very simple what we're going to talk about today, okay? Now, when you're looking at the daily RSI, there's a couple components that you can see. And you know what? Let me actually turn one of those components off to make this as simple as possible. So on your chart right now, or on the screen, you can see a couple things. You see a line right here at the 70 level. You see that? You have a line down here at the 30 level, and they create this purple box. It'll be faintly purple on your screen. Now, in addition to this box that tops at 30 and bottoms at, or tops at 70 and bottoms at 30, you're also going to see a purple line. Okay. And those are the only two main components you need to pay attention to: the box and the line. Okay. Now, here's how we use these components. When the price of the S&P 500 is going up, in general, you'll notice that that purple line is also going up because it's gaining strength, right? But there comes a point in time where it's gotten so high that it really can't go much higher. It's starting to just get too high. And the way in which you can tell that it's getting too high is when this daily RSI goes above that box, when it goes above the 70 level. Or in other words, or in other scenarios, what happens sometimes is the S&P 500, the price will start going down, 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 down. And as it's going lower and lower, it's really gaining strength to the downside. But eventually, it's gone so far down that it really just can't go any lower. And that is represented by the daily RSI going below the box or below the 30 level. So in easy terms, can be much more complicated, but in easy terms, when the daily RSI goes above the box, the price is starting to get a little too high. When the daily RSI goes below the box, the price is starting to get a little bit too low. And what we can see, if we look at this daily RSI right now, if we zoom in, zoom in, zoom in, for the very first time, and again, over 345 days, 346 days actually, the daily RSI has now gotten back to the bottom and is about to fall through the bottom of that box. The last time that we saw the daily RSI for the S&P 500 fall below this box was back here in April of 2025, as we bottomed following the Trump tariff crash and then rallied into a crazy market, seeing the S&P 500 rally from lows to highs of about 44% over the course of a year, which is nuts. So to put this into perspective, the last time the daily RSI got this low, we saw the S&P 500 rally over 40%. Now, does that initially mean that we're about to do the same thing? No. Give me time to give you context, okay? Before you run out and start buying as much stocks as you possibly can, let me give you a bit of context. There's more that goes into this, but that's the premiere. That's the preview of what we're talking about today. The daily RSI has now officially reached one of the lowest levels that it's been to within the last year, officially hitting the lowest level that it's been to within the last 346 days. And now it does make sense, right? Because if you look at it, the daily, I mean, the S&P 500 just not really performed super well. We saw the price, of course, top out right around $640. It failed to break it, failed to break it, failed to break it, lost a lot of strength. You see how, like, although the price of the S&P 500 was still going up and performing well, as we got close to this $640 zone, the strength started to fall. That's a sign that we really struggled when we got up here. And so, of course, naturally, after struggling for so long, you're going to see the price start to roll over, and you're going to see that RSI start to pull back to some of these lower levels. Again, currently back around that 30 level. So it makes a lot of sense as to where we're right here right now. And it just goes to show how much damage the market's been through, even if the price doesn't reflect it of the S&P 500 itself. Now, with this in mind, I just want to go show you historically what has happened when we've seen the S&P 500 see its daily RSI at this level, and then I'll talk about what I think will happen here. Okay, so let's go and plot out the last couple times that we've seen this happen. Here, 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 boom, boom, and boom. This is in the last 4 years. Okay, this has been the last. Here, let's do it one more time officially. This is in the last, 4 years now. This is every single time that the S&P 500 has seen its daily RSI get oversold. Let's just go look what happened. The last time, we saw the market bottom and absolutely rally into another bull market. The time before that, we saw the market temporarily bottom and give us a pretty solid rally from down at $505 all the way up to $535 for VLO. The time before that, we saw a bottom for sure, in which the market then found that low around 475 before rallying all the way up to 560. The time before that, we bottomed, seeing the market rally from 454 all the way up to 520 bucks. Time before that, we bottomed before going on a massive run. The time before that, we bottomed before making a little run, then continuing back to the downside. And then the times before that, the last two times before that, we put in a bottom right down here before slowly trending upwards. And the time before that, we put in a small bottom here before rallying a little bit and then continuing this pullback to the downside. And so what you can see off the gate is that in the last 4 times that we've seen the daily RSI hit this overextended level to the downside, we've seen a rally of some sort. Some of those rallies were small. Some of those rallies were big. Now, what does that mean for where we are right now? Well, I think it just goes to show that although it's not guaranteed, and nothing is guaranteed in this world, especially in the stock market, that this isn't a bad time to be buying in general for my own portfolio. I can't tell you guys what to do, but I can say what I think. And when I think about this, I think, okay, well, right now we are currently seeing something happen that only really happens when we do try to find a bottom. So even if we don't find some sort of bottom here, I think the market's going to at least try. And because of that, I am willing to go in and do a little bit of buying. Now, am I buying as much as humanly possible? No, absolutely not. The reality is that we just started seeing the S&P 500 roll over. It just started to pull back. And sometimes, even when you get this signal printing, it can go much lower. For example, look at what happened back here. We put in this signal right here, rallied up a little bit, and then fell 15, 16% for the S&P 500 afterwards. So no, I'm not going to go in and buy as much as I can right here because we easily could make a move of this nature back down to say like 560 or something like that. I'm vastly aware that that can happen, especially considering the amount of sheer liquidity that we have back down at these levels, right? So I know even if we recover a little bit, we could pull back. So I am still stacking some cash on the side and maintaining a capital position to be able to go in and accumulate at lower levels. But that's not the point. The point is simply just that, you know what? Historically, when we've seen this happen before, the market's tried to rally. And so because of that, I like to look for opportune moments to buy. I like to go against the grain. I like to buy when everyone's scared. And what better moment than when everyone feels like the market's about to drop, but we're getting indicators flashing that says that it could try to recover sometime soon. So I'm going to go in and I'm going to buy a little bit of my stocks right in here. And I'm going to buy a little bit if they roll over because you guys know that's how I built this portfolio. I didn't build a $365,000 portfolio within 1 year by going all in at once. No, I slowly entered. I bought 10,000 here, 50,000 here, 30,000 here, 40,000 here, slowly over time. $600 this day, $600 that day, in order to build into a position that I felt confident in. And although, it's not really looking amazing over the last year as we have pulled back a good little bit, at one point this portfolio was up $45,000, which isn't quite bad considering I don't put in 10 hours a day or 20 hours a day into this portfolio. No, I just passively invest in the stock market. I casually invest in the stock market, maybe is the better way to place it. And that is something that I like to do. Look for opportune moments to accumulate when it feels like we have a decent chance of seeing some sort of recovery, just a good buying opportunity. And history has shown that when the S&P 500's daily RSI is in the oversold region, it's one of the better times to be doing some purchasing. And so guess what? Into this week coming up, I am going to buy a little bit. I'm going to buy a little bit of the S&P 500. I might buy some of my individual stocks. I might buy some more SoFi or some Hood or some Apple or whatever it may be, because it, again, historically, is just an opportune moment. And if the market continues downwards and the daily RSI gets even worse, which it could, guys, which it could, by the way, it could fall even lower. We could see this bad boy fall all the way down to 20. If it does do work, I'll just buy bigger position sizes. Buy a little bit here and be willing to buy a lot more down here, and be willing to buy a lot more down here, and be willing to buy a lot more down here. Because buying in dips has never resulted in me losing money, because I was always willing to hold long enough to get to a profit. It's like whenever I first started this portfolio, right? Whenever I got back into stocks, guys, look what happened. This freaking thing nuked, dude. It fell like $10,000 in my first 2 months back. It sucked. But guess what? I was buying and I was buying and I was buying. And then eventually it paid off. And so in a pullback like we're seeing right now, I'll be buying, because I know eventually it'll pay off. And so that's kind of what I wanted to point out today, was that we are seeing something that hasn't happened in a very long time. And the exact amount of time is, I believe, 347 days. And every time, things have gotten interesting. So I'd love to hear your thoughts down below. Are you guys going to use this as a time to accumulate, or start paying more attention to stocks? Are you going to change any strategy, or is this something that's like a not factor to you? Do you not really care what an indicator is doing? Do you not really care what the charts are showing? Do you only care what maybe the news are saying, or do you just buy every week no matter what's going on? Let me know down in the comments down below. Is this something that's important to you guys? Because I do find it important enough to make some small moves in my portfolio as a result of it. So I'd love to hear your thoughts down below. Don't forget, this is a brand new YouTube channel. I only made this channel about 2-3 weeks ago, so feel free to subscribe if you do find the information unique or entertaining or valuable, whatever it may be. And I hope you guys did enjoy. I can't wait to see you all in the next one. Peace out, everybody.